What are ETFs and index funds? Before we dive into the list, let's define these tools. ETFs, exchange-traded funds. These are investment funds that trade like stocks on an exchange. They aim to replicate the performance of a specific index, such as the S&P 500 or Nasdaq 100. Index funds. These are mutual funds designed to track the performance of a specific market index. Unlike ETFs, they're bought and sold at the end of the trading day. Both options are highly effective for retirement due to their cost efficiency and diversification benefits. Broad market ETFs and index funds. Broad market funds are a cornerstone of retirement investing because they provide exposure to a wide range of companies across industries. Vanguard S&P 500 ETF VOO tracks the S&P 500, representing the 500 largest U.S. companies. It's a go-to choice for growth over the long term. Fidelity Zero Total Market Index Fund FZROX. This fund offers exposure to the entire U.S. stock market with zero expense ratio, a great low-cost option. Schwab Total Stock Market Index Fund SWTSX, another excellent option for capturing the performance of the whole U.S. market. International ETFs for diversification. Diversifying outside the U.S. is essential for managing risk and capturing growth opportunities worldwide. Vanguard Total International Stock ETF VXUS covers developed and emerging markets outside the U.S., providing broad international exposure. iShares MSCI Emerging Markets ETF EEM focuses on emerging markets like China, India, and Brazil, offering higher growth potential. Schwab International Equity ETF SCHF, a low-cost option to invest in international companies. Dividend-focused ETFs for income. As you near retirement, income-generating investments become increasingly important. Dividend ETFs are a great way to achieve this while still participating in market growth. Schwab U.S. Dividend Equity ETF SCHD tracks high-quality U.S. companies with strong dividend payouts. Vanguard High Dividend Yield ETF VYM offers exposure to companies with a history of consistent and high dividend payments. iShares Select Dividend ETF DVY, a fund that focuses on companies with reliable and growing dividends. Bond ETFs for stability. As you approach retirement, it's wise to reduce risk by adding bonds to your portfolio. Bond ETFs provide stability and income. iShares Core US Aggregate Bond ETF AGG tracks a diversified portfolio of U.S. bonds, offering steady returns. Vanguard Total Bond Market ETF BND covers a wide range of investment-grade U.S. bonds, including treasuries and corporate bonds. Schwab U.S. TIPS ETF SCHP focuses on Treasury inflation-protected securities tips to guard against inflation. Sector-specific ETFs for growth. For those looking to boost growth in specific sectors, consider these funds. Technology. Invesco QQQ ETF QQQ, which tracks the NASDAQ Q100. Healthcare. Healthcare Select Sector SPDR Fund XLV, focusing on large healthcare companies. Energy. Energy Select Sector SPDR Fund XLE for exposure to the energy sector. While these funds offer growth potential, they also come with higher risk, so allocate wisely. Target Date Retirement Funds. For a hands-off approach, target date funds adjust their allocation over time based on your retirement date. Examples include Vanguard Target Retirement Funds automatically reallocate from stocks to bonds as retirement nears. Fidelity Freedom Funds, similar to Vanguard's, designed for set retirement years. These funds are ideal for investors who want simplicity and don't want to rebalance their portfolio manually.